No, I'm just kidding.
I was
Okay,
hoping
everybody
you
should.
might.
You were hoping what, Jen?
I was hoping you might do it in Chinese tomorrow.
Yeah, I think Ni Hao is about the extent of my Chinese at this point. But as Rob did say, we are going to do the session again tomorrow, and I hope you guys, if for any reason you can't stay today, or honestly, sometimes it's really good to do it twice, because it's never quite the same the second time around. There'll be new questions, new ideas. I'll be happy to repeat a lot of the stuff that I speak about today. And as you guys are watching at the wonderful GoToWebinar screen, let me just pull up a little bit of what I was going to do. I'm just going to take you actually to the Amazon website.
And show a copy of this book.
We're going to show a copy of Nicholas's book and talk a little bit about this gentleman who is a fascinating guy. Where is he? This is every book but his. Really? This is I want to get the original one. Bear with me. Bear with me. Nicholas Darvis, How I Made $2 Million.
I see the black and white and red one. That's the one that I got, and that's the one that has, I think, the other editions that show you the old cover and whatnot.
Wow, it's really interesting. They didn't have this book is so old that the actual old cover you guys see at the front of the webinar is not there. But anyways, it doesn't matter. This is just for show, so we'll just click on this one. It really doesn't matter. My friend Zarbo is in the audience today, and he had mentioned to me today, I didn't even realize this, that Nicholas Darvis was Hungarian, and I actually found that to be pretty amusing because being East European myself, and I mean Zarbo is probably going to laugh at what I'm about to say. The thing about Hungarians that I love is that they're extraordinarily smart people, but they're also full of crap half the time. So one of the things that's very interesting about Nicholas Darvis is that we never really know if he actually made the $2 million in the stock market as he claimed, or whether he made more or less. He never really showed the audited returns of his investments. He was, in fact, involved in a little bit of controversy because I think one of the attorney generals went after him to try to find out exactly if his claims were absolutely accurate. The key thing is this, though. It really doesn't matter if he made $2 million or $1 million or $500,000 or $2.5 million in the stock market in the early 60s. The key thing about Darvis that I think is so valuable and why this book is considered to be, in my opinion, one of the greatest books ever written about trading is that the other aspect of being Hungarian is that they are ruthlessly smart and intelligent and highly pragmatic. Of course, the other great money manager that we all know is George Soros, who's known for absolutely having no sentiment whatsoever when it came to his investments. And that is the core thing that Nicholas Darvis actually taught me, and I think teaches every trader that has ever read his book 50 years after it was written. I just want to give you a little bit of a background about this gentleman because I think it's so fascinating. I mean, his story is just completely out of left field when you study it. He was a guy in the 1950s, an immigrant from Hungary, basically fled Hungary in 1943. Already know that he was a smart man because he fled ahead of the Russians and ahead of the Nazis. Came to America and actually connected with his half-sister and became part of a dancing duo team. I mean, this is really sort of a Fred Astaire matchup in the early 50s, and they were very, very popular. I guess I never realized that ballroom dancing was still very popular at that time, but they were very popular. They traveled all around the world, and what happened was that one engagement, one customer didn't have money and paid him in stock, and this little bit of stock that he got somehow had done very, very well, and he got hooked on the stock market, and he started learning everything he possibly could about the stock market, and of course, like every novice investor, went through a very long learning curve period, where he made every single mistake that all of us have made. He listened to his broker. He traded too much. He traded too little. He changed his opinion. He traded first strictly on the tips from his broker. Then he traded strictly on trying to understand the fundamentals of the company and buying valuation. And then eventually he kind of sat down and used his smarts to figure out what it was that was working, what it wasn't that wasn't working. He had, like, I think 4 or 5 positions on, and only one of the positions had worked really well. And what was surprising to him was that this was a stock to which he paid absolutely no attention to, and that he didn't even sort of consider to be a worthy stock. Yet this was the stock that made him money. And out of that basically came out what all the traders know as the Darvas system. And the Darvas system is sort of a very, very interesting, sparse, intelligent system for how you would trade any financial instrument. And the first assumption of the Darvas system is that there is no such thing as a good or bad stock. There's no such thing as a good or bad euro. There's no such thing as a good or bad pound. There's only things that go up when you're long and things that go down when you're short. In other words, the most important thing that I think that all of us fall victim to, the idea that there is some kind of value and that we can find that value, and as long as we can find that value, that's the reason why we should be investing into a position, is absolutely false. The only reason we need to be investing into a position is because we think we will win. And the only reason we want to not invest into a position is because we think we will lose. It doesn't matter that it's worthwhile. It doesn't matter that the market is insane for example, keeping yen at 78. It doesn't matter that the euro should be at parity if you listen to every perma bear out there. None of those things matter. The only thing that matters is, are you on the winning side or on the losing side? And so Darvas decided that, and remember, this is the other thing that was sort of fascinating about him. This is a guy who basically is doing what? He's traveling around the world in the 1950s, which is actually kind of an interesting concept if you think about it, as this was really before the kind of global travel that all of us do now regularly. It was very unusual. This was before the internet, before I would even say long-distance telephone calls. I mean, imagine, calling long distance from, I don't know, Nepal or anywhere else where he was at that time. It was almost no communication. The only type of communication that he had was the old version of Twitter. It was called the Telegram. And it was actually a very, very effective mode of communication. But here was the thing that Darvas, I think, excelled at, because, and this is where his lessons as a retail trader, because I would say there was no one who was more of a quintessential retail trader. That is, somebody who was a quintessential outsider, one who doesn't even live near Wall Street, much less comes to the stock exchange every single day and hears all the insider trading, or comes to the pits in Chicago and hears all the trading that's going on in there. This was a guy who was out of touch and out of mind something like 50 weeks out of the year, and who used 1 week old. This is my favorite part about this whole story of Darvas, is that Darvas would make his decisions on 1 week old Barron's magazine. So he would have Barron's a week after it was published, sent to him wherever he was in the world, and he would read it a week later and come up with his stock ideas. Now, I think it's one of the reasons why I find it so amusing is because, of course, I get my Barron's now downloaded to my Kindle like on Saturday morning at 5 a.m. And since I work European hours, I'm up at 5 a.m. and I read my Barron's first thing in the morning. And the irony of the whole thing is it really doesn't matter. I could be reading it, a month later. And what Darvas taught you is that time itself doesn't matter. What really, really matters, and why he was such a great innovator in terms of retail trading, is structure. Because what Darvas did is he said, look, I'm all over the world. I'm trading basically on very, very old information. I don't have any advantage. As a matter of fact, I have every disadvantage you could possibly imagine. I can't even talk to my broker. I don't have any informational advantage. How do I succeed in a market where I have no informational advantage, or excuse me, where I have no speed advantage? And what he did was he basically designed a very interesting system that is executional advantage and analytical advantage that I think all of us can use to this given day. Now, bear with me. I'm just going to pull up my IntelliCharts, and I'm just going to show you his system a little bit in detail. All right, just bear with me, because I don't want to show you this chart. I want to show you just a pure, clean chart of the euro. Roberto, can you just tell me, I just want to make sure you guys can see, do you guys see the chart of the euro?
Yeah, it's crystal clear.
Okay, perfect. So, Darvis's was basically this. And let me just, I'll do this daily because we'll just look at the long-term charts. What Darvis basically understood is that when things break out towards new highs, they tend to go in what he called boxes. And boxes were nothing more than what we call ranges, right? So what he would do is he would look at this range over here, right, in the euro. This is a new high. Let's assume it's a new high. Just indulge me for a moment. And it breaks a new high, and then it establishes a high and a low of the box. And what he would do is he would watch this very carefully. And once the high of the box, this is what he called the Darvis box, would be broken, he'd get long with a stop at the bottom of the box and then just milk the position. Now the thing is that when this strategy works, to its optimal, right? Here's an example. Let's do it to the short side. By the way, one interesting thing is that Darvis never shorted in his life, but his system can be used beautifully on the long side or to the short side. So let's take a look at this idea of a Darvis box, right? This is a new low, right? It creates a box, and the box is broken. The Darvis box is basically what you and I refer to these days as kind of support. But it's support and resistance at the points of swing highs and swing lows. That's what makes it so interesting. But the technical aspect of it is not nearly as interesting to me as the execution aspect. Because here's what Darvis did that I have been using myself. Now, just to put you into, give you an understanding of how I trade. I mean, some of you know me, some of you follow me on Twitter, maybe some of you may have seen me on TV, but sort of a background to what I do. I am not just a pretty face. As a matter of fact, few people will even say that I'm a pretty face on TV. I actually trade like a banshee every single day. As my partner Kathy says, we are traders first, we're analysts second. We both have our own accounts. We have our corporate accounts. We do signals, and I'll talk a little bit about all that a little bit later. But the point is that I'm in the market all day long. I trade retail Curnex, which is probably the tightest spreads that a retail trader can get, right? And I trade for commission. In other words, I don't even pay spread. I'm willing to pay commission on a round ticket just to get execution, liquidity, access to interbank market, all that kind of stuff. So I'm sort of the antithesis of what Nicholas Darvis was. And yet, it is only when I started using his execution system that I have started to really, really excel at my trading. And here's what Darvis did that I think is so fascinating. Forget the boxes, forget all the stuff. All the stuff is very interesting. But what he basically structured is the following thing. By saying, I'm going to stop enter, and a stop entry is basically, I'm just gonna zoom in on this just to give you an idea, right? So this is the box, right? The typical Darvis strategy would say, okay, so the low on this box is 42.17. If the low is broken, let's say the euro goes down to 42.15 on the bid, right? I'm going to sell the euro on a stop entry. That means, what am I doing? I am looking for a horrible execution. I'm looking for a bad fill. I'll give you just sort of a little bit of an anecdote today. I traded 15 times today. 15 times all across various pairs. Euro, yen, yen crosses, Euro Aussie, all sorts of pairs. Out of those 15 times, I got slipped 14. I got much worse fills than what I wanted. And yet, I didn't have, and I say this with, of course, all the warnings possible. Today was an extraordinarily good day. It's not a day that I would have every single day by any means, and past performance is in no way indicative of future results. So I'm just simply using this as an anecdotal example. In no way I want you to construe that this is something that happens to me every single day. But the point being is, I got bad fills 14 out of 15 times, and I made money 15 out of 15 times today. I had a great day. To which my lovely wife, some of you may know her as a hedge fund girl, looked at it and said, "Ha, I make more money in an hour." So I love girls with balls, not literally but figuratively. I just thought it was great. I mean, how many wives of yours would say, "Oh, you're not trading enough. Step up your size." You got to love that, right? So, anyways, the point being is that Darvis' strategy was the following: You do not have to be at the screen. This is the single greatest innovation that Darvis brought to trading, in a sense that you enter when the market tells you that there's right time to enter. He did his analysis beforehand, and he sold on weakness, he bought on strength when the market moved in a direction that he thought was going to continue. Remember, there is no good trades, there's no bad trades. There's only winning trades and losing trades. And winning trades are set not by you, but by the market. They're set by the flow of the market, right? So the beautiful thing about Darvis was that he would enter on a stop entry with a predetermined stop. The difference between him and me, of course, is that he didn't have a predetermined exit. He would milk these things forever. I mean, one of the greatest stories in the Darvis book is how he took this one stock, and in literally like 300 shares of that stock, he made like $100,000 because the thing just became such a squeeze bomb that his last 100 shares, he was able to make like $50,000 in 1960 U.S. dollars. It's a serious amount of money as he squeezed it out. I simply don't have the fortitude, the kind of stamina. And Jen is going to come after me. I think she has a very similar mindset as I do. I like to bank my money and come back, bank my money and come back. So I'm the exact opposite. But the point being is, every trade I make, I never go in market. I never even pay attention. Every trade I make is preset usually at least half an hour, sometimes an hour ahead of the trade actually executing. And here's the irony of the whole thing. You would think a guy like me who watches the screen from 2 o'clock in the morning New York time until now, until 9 o'clock Asia time, with just an hour's worth of napping in between, would be all over every single wiggle and would be able to take advantage of every single market movement. Well, guess what? You go for a cup of coffee, you write an email, you pick up the phone from Rob Booker and you have a long conversation, you missed about 5 trades.
I doubt that.
You missed about 5 trades because, and here's what happens, and this is the critical thing that made Darvis's method so superior. So what happens to all of us when we miss trades, right? What's the first instinct that we do? We don't say, ooh, I missed a trade, therefore I'll be an incredibly disciplined human being, kind of like Mitt Romney. I'll be a total robot, and I will not act on my worst impulses, and I will not chase this price into the worst price that I wanted to just because I missed the trade, just because I want to prove the market wrong, No, of course, we do the exact opposite. What do? We're supposed to enter at 50. The market now is 65, 70. The market now is in our profit zone, right? Now the market now is in our profit zone, and what are we doing? We're just getting into the market because we missed the friggin' trade, right? This is the greatest thing that Darvis did. This is probably the single most valuable thing. Whether you day trade like a mofo like me every single day and you do 15 to 20 round turns, or whether you do 1 or 2 trades a week, you will miss your opportunities if you do not enter on a stop entry and you do not wrap around your trade with proper stop and entry figures. Everything you do about trading should be pre-thought before you do it. If you're trading in the moment, you know how they say you're supposed to live in the moment? Well, trading is the exact opposite. The last thing you want to do is be trading in the moment, okay? The last thing you want to do is react to what's going on, because I guarantee you, living in the moment is great. Trading in the moment is a call for disaster. It must be methodical. It must be well thought out. It must be highly unemotional and utterly unsentimental. And that's why, by the way, Darvis, you could tell he was a Hungarian, because those are great traits that most Hungarians possess. I'm sure my friend Zabo now, who's listening in the audience, is just rolling over with embarrassment. But my point being is this, that I think this is the key thing that I wanted to share with you about the Darvis system. You're all welcome to of course, buy the book, read it very carefully. There's quite more to it than just simply that. But the kernel, the essence for us as traders is the fact that what Darvis did was he said, I have all these disadvantages arrayed against me. How do I turn them into advantages? How do I not let the market control me, but how do I control the market? And the Darvis box system was the way you control the market. So I'm going to take now a few minutes because our time is running short, and I want Jen, of course, to share with you some very interesting stuff. I'm actually going to share with you the system that is Darvis derived. I mean, it's not that Darvis inspired me, but I think what inspired the fact that a lot of the ideas that Darvis had were the same type of ideas that I had in developing this system. And what I'm actually going to do is I'm going to live trade this with you. What I mean by this is I haven't, this is the chart of Eurodollar, and I frankly, because I've been trading everything else under the sun over the last couple of days, I really haven't been focusing too much on the Eurodollar, and the kind of stuff that I've been doing is a little bit different from what I'm going to show you. And I'm actually going to tease you a little bit, because one of the great things about being in the webinar today with us guys is that you are the first to know that in about a month from now, after we come back from the FXCM Expo, and I hope we'll see many of you guys there, both Rob and I will be there, and we'll both have a lot of sessions. We're going to do a second webinar on risk control, and I'm going to tease you with what I actually do on a day-to-day basis about risk control in the second seminar. But for now, I'm going to show you a system that we pretty much, the derivative of which we pretty much trade in BK on a day-to-day basis. And those of you who are with us in BK Signal Services have already gotten a few of these type of trades from us ever since we revamped our services on the 15th. But I'm going to go back here 10 days, Eurodollar system, and show you how what I do is sort of the exact opposite of what most everybody does and why I think it works. And the idea basically is the following. So most everybody knows this is half-hour charts, Eurodollar, last 10 days. And again, I have not traded this, so I'm going to trade this with you as though I traded it live. Everybody thinks the RSI should be sold at the level of 70 and bought at the level of 30. Well, my view is the exact opposite. I am like the Darvis clone here. I believe that when things are getting bought, that's when you should be buying things. And when things are getting sold, that's when you should be selling things. When the market is highly attuned in one direction, that's when you should get involved. That is not the time to try to pick tops and bottoms. That's one of the greatest, I think, innovations, aside from just the execution innovation that Darvis brought to us, is the fact that he realized that new highs are just a path towards higher highs, and new lows are a path towards lower lows. And anybody who's tried to buy Nokia or HP or BlackBerry over the last year and a half surely knows what I'm talking about. And anybody who tried to short Apple over the last year and a half surely knows what I'm talking about. So buying tops, selling bottoms, sucker's game, regardless of what instrument you trade. So what I'm basically doing is I want to be a buyer of Eurodollar every time it breaks above 70 on a half-hour candle. So here, let's just take this. I'm going to get long here. The candle is 71. I'm sorry. I'm going to modify this because it's not that blanket. I'm going to do this only during 12 midnight to 12 noon New York time. Why am I going to do this only 12 minutes to 12 noon New York time? Because that's the highest liquidity time in the currency market. That's the half of the day when everybody's around. Asia, Europe, and North America are all around, and that's when trends matter. That's when ideas matter. That's when prices really matter. So I'm going to ignore all my signals until I get to this is all New York time. So. And Rob, you do see the display data, right? You do see this?
Yes, it does. It shows up.
Okay. All right, so it all shows up. So here it is, 9 o'clock at 69, 8:30, 69. 9 o'clock, the chart goes to 75 on the RSI. Now, why do I like the RSI? The reason why I like the RSI is because, again, utterly unsentimental. There is no fudge factor. There is no, ooh, maybe it's a double bottom. Ooh, maybe it's a double top. Ooh, maybe it's a wiggle. Ooh, maybe it's a squiggle. It is black or white, red or blue, hot or cold. Above 70 is measurable, quantifiable, identifiable, and therefore inarguable as to what you want to do. So if I'm at 70 or above, here obviously I'm at 75, it closes 29.81. I'm going to be a buyer at market. I'm going to buy this move at market with a 50 stop and a 30 target. I'm not going to make every stop here. We're just going to go through a couple of these things because I don't want to bore you to death. But bottom line is, with a 50 stop target, we obviously make our target here over the next 3 or 4 hours, right? So let's see. We came in at 29.81 plus 30 would make us 30.11, which is like right around here. That's 12:30. The day is over. I'm done. I made my trade. I'm done. Okay, so today on the 4th we made plus 30. Now we go back to the 5th. The market is 72, goes 70 to 30.43 at 9:30, right? I'm getting long on lows 43. I'm looking for 73. Do I make 73? Not quite. Not quite. And guess what? I get stopped out. Well, that's part of my strategy. I keep going. As I said to you, I haven't even traded this thing, so I have no idea how many trades are going to work or not going to work over the last 10 days. But let's try this. So here we go. It's 3:30 after 12 midnight, 29.43. I'm a seller here because we're now below 30, right? I'm looking for 29.13 as my target. Do I make it? The low is 29.19. It comes back, but nowhere near my stop. And, of course, it does make 29.13 over here, right? Where's the low? 29.01, right? Okay. Here's the beautiful thing. Now, this is the thing that this strategy does that will drive all of you absolutely nuts because it is so, so hard to do. I just banked the profit, right? But what does my RSI tell me? My RSI tells me right now, sorry, not on this one, but on this candle over here, it goes right back into below 30 territory.
Right.
It is very, very hard once you made money to go back into the trade on the same side of the structure at worse prices and try to press your move. But guess what I'm going to do? I'm going to do it.
Sometimes that second dip below 30 or that second move above 70 can be really powerful, right?
Absolutely. Not only is it powerful, but it is the quintessence of success of my strategy. Because the whole point of my strategy is there'll be days where I don't do anything because the RSI is just not doing anything. This is the beautiful part of it. I stay out of the markets when there's no trend. And when things happen, they don't just happen in a small burst. They happen in a concerted, concatenated burst for more than just a couple of hours. They go usually sometimes for a 24-hour cycle. So I milk all of my long trades, I milk all my short trades until I'm finally done, until I'm squeezed out and there's nothing left there. And then I go back and sit and I watch and I see how the RSI trades. So here I get short, I made money, and I get short again, and I bank more money because it goes even further. Now this is a very, very hard to trade for most people who've never done it. But don't trust me. I'm sorry. Don't ever trust anything I say. Do it. Work on a demo account. You know, feel it out. See how it works out. And one of the things that you'll see that'll be amazing is how the flow of this thing really, really takes you up. So here's the next day. Nothing goes on. This is the beautiful day. On a day like this, you would find me wasting more money than I don't know, than most rappers in New York City, right? I mean, this was just an absolutely retarded day to trade because there's no clear definitive trend. It's just breakout, fake out, boom, boom, boom. Unless you're trading for like 2 ticks at a time. Well, unless you're trading Jennifer's strategy, which is perfect for this kind of trade. There's just no way to make money out of this kind of strategy. So one of the beautiful things is you see RSI keeps me out of really dumb, stupid, bad days. Here we go back again, right? So now, where am I? I'm like 10, 11. It's 12, of course. Now I'm looking for my 70s. I get my 70 at 29.12. And, of course, I make 29.32, right? And here's I go right back into it. I go right back into it at the next 70, which is like, let's say, 42 for argument's sake. I'm looking for 72. Do I make it? Boom. I make it. Surprise. I make it maybe another 12 hours forward, which is what happens a lot of times. But I do very often make that second trade, right? So now I've banked like what? 1, 2, 3, 4. I can start counting. 5.
And that second trade.
We had 5 trades.
Yeah, that second trade does not happen during hours that you could take a third trade. But if it did, would you add a third trade on top of your second trade simultaneously?
No. One thing, perhaps I'm not clear. Once I'm going to trade, I don't do anything. I let the trade resolve. So the trade has to resolve either positively or negative. And obviously, if the trade resolves negatively, it's very unlikely it's going to reset up real quickly. Although there are times, here's what happens. Sometimes when you have very, very quick turns in the euro dollar, you will get stopped out of your long, and the euro dollar will turn into a short, and then you can take a short in it. But if you're in a very, very long concerted trend, you sometimes can take 3 trades in a row. That means there'll be a trade at 2 o'clock in the morning that will get done. There'll be a continuous trade, let's say, from 5 in the morning to 7, and there'll be another third burst up from 9 until 12 noon that time. So I will take trades as long as I am done, and as long as I'm flat and I'm during the 12 to 12 hours, I will continue taking trades as long as my system tells me it's a legitimate time to take trades, that there's momentum in the market. Is that clear?
Yeah, it's clear. Absolutely.
Yeah. So, we keep taking trades here. Where's my mouse here? I got to bring my mouse back. Here we go. Sorry. Okay. We're 10-12, right? Keep going. I think actually, so okay, I took a trade here. Now here's what I'm going to show you. Okay, let's assume I made profit here, and then the trade is at 82 and it tells me to go in. I'm going to go in. Yes, I am going to go in. And maybe this is not the most intelligent trade. At 82 it's obviously very, very overbought. But I've seen trades at 82 that simply work themselves off and then go higher. So I don't want to second guess the market. In this case, obviously the trade didn't work out and it was a loser. And I keep going, right? I keep going. Again, I have very little action here, but here I get much more action. I get trade here, another trade here, and I keep banking my profits. And this is the beautiful thing. This is the thing that I think is just so fascinating. What you see here is a pause and then a further continuation up, right? I think you actually probably could make 3 trades here. Let's just run through and see if we could get 3 trades out of here. So 70. This closes out at 29.88. So I'm looking for 98.18. You can tell my math skills are really amazing, right? So that'll be 30.18 right over here, right? Let's say we make it over here. So 30.18. Now stop over here, close 30.15. I'm looking for long to get long at 30.45. Great, I make it here. I get long at 30.50, right? This is a really interesting thing. So I have a 50-point stop. Yes, it goes back against me, but it doesn't take me out. And then it goes on and on and on. And then in Asia, it makes this by the way was yesterday. This was the Spanish non-downgrade from Moody's, and we were actually in this trade. This is actually I'm just realizing myself as I'm looking at this. This was the trade we were in for the BK subs. So we banked out this trade at on the Asian Open, right? And this is actually perfect because I'm going to conclude my whole Darvis flow structure seminar with the following point. Those of you who followed me on Twitter saw me saying we're going to hit 31. When we were here and I said we have this big move, we're within 4 or 5 points of 31, we are going to hit 31. And a lot of people were like, I'm not so sure. It's really running out of gas. This is really ridiculous. It's not going to run the numbers. And I said it's going to run 31s. Not only is it going to run 31s, but it's going to go through 31s with force, right? Now, why did I say this? Because I have some incredible powers of fortune telling? Absolutely not. Because when you look at the currency market, nothing ever changes. There's this great book called Market Wizards by Jack Schrager that I think almost everybody has ever read. It's the first one, not any of the other ones, but the first one in there. It has a story in there about a guy named Michael Marcus who talks about how when they used to trade the Deutschmark, that when they would look at the round numbers, and what would happen is everybody would kind of freeze and hold their breath as the market would get close to a key big number. And this was a key big number because this was the swing high over the last couple of months. It would just pause, and then once it broke, it was like a dam that broke. Once it broke, it just everybody starts to pile in, right? It's just crowd behavior. And if you understand crowd behavior, you understand why shorting these ideas is incredibly dumb and why you really want to stay with the crowd at these points of inflection because they're only going to take you higher. So it's not like I've really gotten much smarter. I've just gotten a little bit wiser in my old age, and I stopped fighting the tape. I stopped fighting the trend. I started going with the flow, and then I overlaid everything with the Darvis system, which gave me this unbelievably good structure to continue trading in the market. So because I now know when I can enter, when I'm going to stop, where I'm going to exit, I'm able to really control all of my trades with much better clarity. So in my little live trading here, let's just count it up. I can look here: 1, 2, 3, 4, 5, -1, right? -1, 6, 7, and I think there was another loser there. So 7-2, 7-2, right? So 7-2. It's 210 points to the upside, 100 points to the downside, 110 points. Not bad, not government work. I'll take that anytime on a system that continuously trades throughout the year. And again, past results are in no way indicative of future performance, but in back tests that we've tested the system over across a very, very large amount of very volatile market data, this thing basically is about 68% accurate. So if you're 68% accurate with a 30 target and a 50 stop, you're net positive, which is really the only thing you can possibly be. You can only possibly ask yourself of in the marketplace. Now, I am going to I'm going to show you a completely insane system in our next webinar, and I highly recommend that none of you follow it, but it will definitely be a lot of fun. This is the system that I trade now with ridiculous risk-reward parameters, but as I said to you, I'm having the best month of my life right now, even though my wife thinks I should step up size, using something that I think breaks every single rule, and that's going to be our next webinar in November. But for now, I'm just going to end, if you allow me, just 2 minutes. I just want to show you the the BK website.
Absolutely.
Because, is that okay, Rob?
Yeah, absolutely. So here's what happens next, folks, as Boris gets the website ready. Some of you want to review the entry criteria, the stops, and whatnot. Remember, every moment of the webinar tonight's being recorded, and we'll have that recording available to you in less than 24 hours and sent directly to your email inbox. For some of you, if you're really nice, I'll deliver it to your house in person. And I loved every minute of this. I thought this was fantastic, and I know Jennifer enjoyed it too. And what's going to happen next is Boris is going to take us on about a 2 or 3 minute tour of the website. You should really take a look at this. This is good stuff. And then we're going to turn the time over to Jennifer, and she's going to teach us an additional trading strategy, step by step, rule by rule, and then we'll get out of here. So Boris, take us through the new website. It looks fantastic.
Thank you, thank you. So, a lot of people are asking us, hey guys, what have you been doing with yourselves? Because you're obviously not working for a living anymore, right? You're working for yourselves. What have you been doing? And the answer is pretty much right here. As some of you may know, of course, long time ago, back before there used to be even computers, we worked for FXCM. No, I'm just kidding. And then after we worked for FXCM, we were global strategists for GFT. But as of June, we left GFT on our own accord because we wanted to basically, people have been asking us for a very, very, very long time to kind of, start our own business. They wanted us to run money, and we just didn't feel the time was right until pretty much last summer. So we decided we're going to do a full force trading, education, and money management website for anybody who wants to get involved in the currency market. So I'm not going to talk about the money management piece of it because this is clearly a webinar for active traders, for people who want to trade themselves. And for those of you who are interested in our money management stuff, you can go to BK Asset Management. Feel free to look at that website. What I want to talk to you today about is we spent last 3 months trying to figure out how we can make everything we do not 1%, not 10%, not 100%, not 1,000%, but 1,000,000% better than what we used to do. And the reason why is because we never, ever had time to really devote ourselves to our audience. So now we finally have the time. And I think we created something that hopefully you guys will find of value. Basically, when you're trading, there's really 2 things that I think you want from anybody who tries to mentor you, from anybody who you use as a guide. 1, you want intelligent trade idea generation ideas. And number 2, you want really well-reasoned education. So we decided we're going to throw everything in the kitchen sink into our service and offer it out literally for anybody who signs up for our signals. They get everything that we have on this website completely free. For anybody who just simply decides to become an IB of ours through FXCM, you get all of the benefit of the trading club for free. So I'm just going to talk to you a little bit about what we do in the trading club. The trading club is, I think, so interesting because we've created a whole bunch of daily material that allows you to interact with us in 100 different ways. First and foremost, every single day we do a 1-hour webinar on a different subject matter. Monday, we just review the whole week. Technical analysis Tuesday. Kathy does World Markets Wednesday. I do Strategy Think Tank Thursday, although I will not be there tomorrow. Kathy's going to do the Strategy Think Tank because I'm going to be here with Rob. And this is a 1-hour webinar where all we do is just literally trade strategy ideas with each other. The strategy that I just showed you, by the way, was the germ of the idea was mine. Some of the improvement was Kathy's. But the major real twist, the sort of critical insight, was just a guy who is this algorithmic trader friend of ours who works for a hedge fund in New York. He actually doesn't work for it anymore. He went back to Carolina. Who basically worked with me on codifying a lot of the stuff and said, hey, why don't you try this? What I find is that there is never no single person is ever behind a good idea. That every great idea is always a collaborative effort. So part of this, Think Tank Thursdays is all going to be all about how we can collaborate on creating good strategy ideas for the market. And then, of course, my favorite session, which will happen on Friday, I welcome everybody who is part of the club or who wants to sign up for the signals to join us, Trader Therapy, where basically I show you yours, you show me mine. We deconstruct our trading charts and our trades for the week and figure out what we did right and what we did wrong, which is, by the way, another thing that Darvis did every single time. Every time he made a trade that was either positive or negative, he wrote down exactly why it worked and why it didn't. And this is going to be, and it's so hard to do. Trust me, I'm the last person in the world who can do this. So because I decided I don't have the discipline, I figured nobody else does, we're going to do it together in a disciplined fashion. So the last thing I'm going to just show you is the 2 pieces of research that we put out every single day. Chart of the day, which you can see over here. Euro pound was the chart of the day today. By the way, let me just show you. This is Euro Yen poised for a turn, October 16th. No lying, baby. Look at the Euro Yen price over there, 101.89. Okay. All right. Not like I want to hump my own ideas, but they were pretty damn good. And then the other thing that we do every single day.
When you're right, you take the credit, and when you're wrong, you're just as good at
exactly. When you're wrong, you ignore it. Yeah, that's right. Welcome to the world. Welcome to the world of trading. When you're wrong, you ignore it. When you're right, you hump all you want, right? Exactly. No, but we really, we actually put out a massive amount now, just not only fundamental research but technical research. This is 5 top ideas for today. We have, we have the Aussie, the C. The euro. As you can see, there's an enormous amount of information here contained in the least amount of space, so you could just look at this in a very conservative fashion, see if you can come up with interesting, great ideas. Look at the, look at the major key support and resistance lines. Actually, it doesn't go back. Does it go back to the archive? Let me see if I can just. I wonder if I can do the archive. I just want to show you the archive from yesterday because. Yet another example of, I wonder if Kathy has it in the archive. Okay, so this is the archive
that's
yesterday. I just want to show you this one thing. Right. See, I just want to show you, this is from yesterday. MACD is on the verge of turning into positive territory for the evidence of a turn of momentum. Break below 102 negates this bullish bias. But what I was trying to basically say is that the Aussie went from a bearish bias into a bullish bias yesterday. And anybody who was reading these technicals, if you took this trade, I was actually trading Aussie all day long today. You obviously saw the numbers. The Aussie did a tremendous session today. And all of this, I caught myself simply because I now spend at least 2 hours a day on all of these charts looking at all the key patterns. So it makes me a better trader, and I hope it makes you guys better traders. You're welcome to join us. It's very, very simple. Just simply go to bkforex.com, and you can just hit Trading Club or Trading Signals, and you can just download. You can just simply click the link and get all the stuff for free if you want to club, or if you want to just join us on the Signals. It's $1.99 a month. I hope to see you guys there because literally we increased our value-added services by a factor of 10. And I think it's so much more valuable for anybody who trades to come in and join with us that I welcome all of you into our fold. Now, I've completely spoken above my time limit, so I'm going to shut up now, turn the mic over to Jennifer, and then we'll take questions afterwards.
All right, leave your screen up for a moment, Boris. This is Rob Booker speaking. Thanks, Boris, for your time. Everyone here is really happy that you spent some time going over the strategy tonight. As is always the case, some of you who came late or who were here but missed even one moment of the webinar might want to review it. You can do that all. We will send you the recording to make sure you know. We will send it to your inbox. If you registered for the webinar and you're here, we will send you the recording. What's important to do next is take a visit in the next 24 hours to bkforex.com. You can even do a less expensive trial of the website. I'm a member. I think it's phenomenal. There aren't really any other individuals quite like Boris and Kathy who do the volume of research that they do as often as they do it, as consistently as they do it. And you will benefit from taking that tour on your own over the next 24 hours. So I'm going to take over the screen sharing. I'm going to become the presenter of this webinar.
Okay, Rob, just one sec if you don't mind.
I don't mind at all.
Okay, I just wanted to show you, for those of you who don't follow us, follow me on Twitter. First of all, that's your number one sin. But where did I just this one guy just on my on, if you just simply hit me, follow me up. There's one guy who just posted on my Twitter feed saying that there's a free version of the Darvish's book. So if you follow that that particular tweet, you'll be able to get the free version of the book. You won't have to pay for the book. I just wanted to let you guys know. But the real reason why I wanted to bring you to Twitter is because this is where I live. I live here 10 hours a day. If you talk to me and you don't insult me and you don't say something stupid, I will always respond to you. Even if you insult me, but it's funny, I will respond to you. But generally, you know, Rob knows this is no better. This platform was built for an ADD person like me. So I talk on Twitter all the time, and there's plenty of ideas that I give out on Twitter pretty much for free. So like, you know, the pound yen and the Aussie yen, look at this. This was early morning news flow, all supportive of risk, pound yen and Aussie yen, possible beneficiaries as day proceeds. This was at 6 a.m. this morning, 6 hours ago. How did that work out? Not too bad today, right? So feel free to use me on Twitter any way you like and ask me any kind of questions you want. So
that is a great idea, to use Boris on Twitter. Thank you, Boris. That's awesome. All right, I'm going to become the presenter, and you are going to see my screen in just a moment. I'm going to go full screen. This means that I'm not going to be able to see your questions during the presentation. But that's no big deal. You don't care, right? That's no big deal. All right, here we go. We're going to show my screen. And Boris, we'll just need to depend on you to make sure that this is visible. You can see it, right?
I see it. I see a beautiful picture of some blonde girl here.
All right, that is, then you're looking at the right picture. That is Jennifer. Tonight, over the next 35 to 40 minutes, here's what's going to happen. Jennifer's going to teach the hopper trade. This is one of the most exciting, simple, straightforward strategies that we've talked about in a long time. I'll introduce Jennifer to you. She'll teach the hopper, and then I'll preview a little trading system I call the red hopper. There is an archive of this presentation already available at 15minuteforex.net. Click on the red button on the home page, and you can watch the presentation. A word about Jennifer, and then I'm going to turn the time over to her. I've known Jennifer for about 6 years. Jennifer has been in the business of trading for 10 years, or more actually, Jennifer. Jennifer's traded everything from a $2,000 account to a $900,000 plus account on behalf of investors. She's made and lost tens of thousands of dollars a day. In the course of my journeys around the world over the last 13 years as a trader and as an educator and an author and a podcaster, I've spoken to hundreds of traders who are successful at making a business of trading for a living. Jennifer has one of the most unique stories, one of the most simple, straightforward approaches, and she's cool under pressure, and she teaches in a step-by-step, straightforward manner. You're going to really enjoy what she has to teach us tonight. So without further introduction, Jennifer, take it away.
Okay, well, thank you for that really nice introduction. And Boris, really enjoyed your presentation. You know, when I look at your charts and they're so clean and clear without, you know, a bunch of clutter, my whole mind just goes, you know, that's what I like to look at. I like to look at an organized chart that isn't confusing you with a bunch of technicals. So I really enjoyed what you had to share about the RSI.
OCD is a wonderful thing.
Yeah, right. So what I have to share with you tonight, I'm going to make very simple and hopefully very concise and abbreviated. Rob and I have been sharing Hopper webinars all month, so I've been through it a few times and cleaned it up a little bit, and hopefully we can, you know, teach you something that is remarkably simple that you'll be able to go out and give it a whirl tomorrow and let us know how you felt about it. So the Hopper is a basic trading strategy utilizing the MACD. MACD is a technical indicator that is probably already sitting on most of your charts right now. It's something that you've been looking at every day. It's not a new indicator and it doesn't cost any money. So it's free and it's already on your charts, and it's something that you can probably walk away and immediately have a look at after this webinar or during this webinar. In fact, in the last webinar, somebody sent me a message on Twitter and said he took his first Hopper trade live while I was giving the webinar. So that was pretty awesome to hear. So what I'm about to tell you is so completely simple that I think when you hear it, you're going to laugh, especially if you know something about trading and if you've been trading for any length of time. and you've had enough time to get complicated with it, this might be appealing to you. Then again, it might make you laugh. But if you take it and give it a try tonight or tomorrow, hopefully you're going to send me a Twitter message and you're going to say that you're still laughing, only you're laughing with me, because it's just unbelievable how simple it is and how it's right in front of us every day. So this is one last thing to say about the hopper is, as an introduction, is it's a strategy that I am most interested in right now for a short-term strategy, meaning I'm looking for 5 pips. Some people call that scalping, which is perfectly fine, as we discussed last night. But it's also a strategy that can be used on the longer-term charts, and it can be used for any amount of profit target. And I'm going to show you a couple of different ways to use it, and I hope that you will take it and add it to your current trading strategies and see what you can do with the hopper and how it can benefit your trading. So the very first chart here, I have a picture of a surfer on here, and we keep talking about surfing when we talk about finding hopper trades, because surfing is all about waiting in the water for momentum to build. You're waiting for a swell to start to build, and you have some indication that a wave is coming. And the MACD does that. The MACD is sitting there performing its calculations. It's like it's sitting there in the water, and it's sensing when some momentum is coming, and you can see it sort of start to make a swell. Just the nature of the MACD, and we're going to go through that pretty quickly. So I like to think about surfing, and I'd like you just for a moment tonight with us to think about finding momentum and feeling momentum and looking for momentum and knowing that that's when that's the kind of indication that we're looking for from the MACD. The MACD tells us a little bit about momentum and a little bit about direction. You put those two things together and you can be a great surfer, or you can possibly be a great hopper trader. So okay, we can go to the next slide, Rob. Starting with the MACD, this is just the one-page lesson of the indicator that I use. It's a basic MACD. Default settings for me are 12, 26, 9. You can use those settings. You can change them if you want to, experiment around. But what you're going to see on my charts tonight was with the settings, which are default for me, 12, 26, and 9. And the MACD simply calculates change in price by looking at history. It uses a slow-moving average and a fast-moving average. It calculates the difference between them and creates a moving average from that difference and does a bunch of different stuff. It's really not important to you or me how it works. What's important is that you see that the information it's giving you on your chart is very helpful for making a decision about getting in or out of a trade. And go to the next slide. So this is the quick rundown of a MACD, which is probably super familiar to everybody here tonight, but we'll just review it a little bit. The MACD line is the heavy blue line, and the 0 line isn't really a line, although I drew a red line over that level just to bring your attention to the fact that there is a 0 level. Above that level, as momentum is building upward, price is moving upward with some momentum, and as the bars are going down below that 0 level, momentum is building as price is going downward. So we have the MACD line, 0 line, the histogram bars. Those are the main parts of the MACD, but I'm also going to touch a little bit on the signal line or the trigger line, which is the slower moving line on the MACD. It's the dashed red line on this chart. And so those are all the parts and pieces of the MACD that you'll be hearing me refer to in the next few minutes. So here's the whole thing. Here's the whole entire trade, the whole simple trade. So get ready to laugh. When the MACD line, which is that blue line, crosses over 0, it's a hopper trade. That's the entry. And, you know, we've been talking about this in webinars throughout this month, and I got really tired of saying when the MACD line crosses over the 0 line, because that's kind of a lot to say. So now I just say when the hopper happens. So what I mean when I say when the hopper happens is I mean that the MACD line is crossing over 0. When it looks like it does on this chart and it's going from below 0 to above 0, that's a buy entry. Very simple, straightforward, and when it goes from above 0 to below 0, that's a sell signal. So when the hopper happens, that's what we're talking about. It's a hopper. Okay, go to the next slide. So here's the basic, simple way to trade the hopper on a 5-minute chart. I'm going to talk about this a little bit, and I'm going to show you a few examples, and then I'm going to talk about how to trade it on a 1-hour and a 4-hour chart. And then from there, I'm going to let Rob take it away. So the simple rules from the 5-minute are that the first thing you do is pick a trading session. And when I talk about picking a trading session, I'm looking for times in the market when you can expect to see volatility, and you can normally see volatility in the first 3 hours of the active trading session. So in the U.S., that would be what I would refer to as the New York session, 8 o'clock in the morning New York time to 11 o'clock in the morning New York time. That's going to be a period of time when you would expect to see a bit more volatility in the market. The European session, Rob will have to help me out with the time conversions. For me, it's about midnight.
Well, you know, if you live in Europe, you know when your trading session is. That's all that matters.
Right, and then the third one would be that I watch anyway, would be the Asian session. For me, that's about 4 o'clock in the afternoon. So whatever trading session you trade, you know what that is, and I'm sure you are familiar with what I mean when I say during the first 3 hours you can expect to see the most volatility. On my short-term trades, I want to get 5 pips or so and get out quickly. So I don't want to sit around with it going sideways for hours and hours in the middle of the trading session. I'd like to get in and look for my trade setups during the first 3 hours on the short-term trades. So you enter the trade when the hopper happens, either up or down, and then the last thing you do is you pick an exit strategy. And one thing Boris said tonight that I completely agree with is to pre-think your trade before you take it. So I know exactly which exit strategy I intend to use when I go to work on a trade. You can go to the next chart. So I have a couple of exit strategies I can show you tonight, and of course you can add any of your own. The first strategy is just a simple 5-pip profit target. You can enter your trade with a default setting in your trading platform that enters your trade with a 5-pip target, and if the market is moving quickly, which would be great if it does, you'll get your profit very quickly without having to think about it. You could exit on a trigger, and I'm going to show you some examples of that. You can exit when the MACD line goes back over 0, or you could exit at the end of the 3-hour session. And then I know that everybody wants to know what kind of stop losses we're going to apply to a trading system, and for the 5-minute charts, that would be a minus 15 pip stop loss. Now, that doesn't mean that you have to take a 15-pip loss every time. It's rare that I do take a 15-pip loss, but what it does mean is that you should never, or I should never, take more than a 15-pip loss on a 5-minute hopper trade. That's the maximum loss I'm willing to take on any of these trades.
This is really great information, and if I can clarify a couple of different things here, just to make sure that I can pre-answer some questions that probably will come up, Jennifer. You're saying that there's a minimum profit target, we could call it a minimum, of about 5 pips, but it can be much greater than 5 pips. It could be 30, 40, 50, and on longer term charts it could be even 100 or more.
Right, and I'm going to show you a few examples of each.
Okay, great. Just to get that question out of the way, because it's already on someone's mind out there, and we want to make sure we're answering the questions. We know you're thinking about it. And then second of all, it's the most famous question ever. Do you enter a trade on the close of a candle, or do you enter it immediately when that line crosses? When we look at this first chart, could you help us answer that question?
Yes.
All right.
So I took copies of a few charts from the past 7 or 8 or 9 days, and the first thing that I'm going to show you is the example where we have a 5-pip profit target. So in these examples, this particular one is a euro-pound on a 5-minute chart during the U.S. session. We had a hopper trade set up because the MACD line crossed over the 0 line, getting us into a sell trade. In this trade, we had, it looks like, no drawdown whatsoever. While the trade took longer to pay off than I would like, it kind of went sideways for a while, it didn't really move against us. And eventually it did give us our 5-pip profit target. And in this instance, which is what we normally see, the move did continue. So if your number is something bigger than 5, it could be 6, it could be 10. I know Rob likes to trade with 20-pip targets. These moves do provide for the higher targets. When I'm doing my shorter chart, my shorter time frame trading, I like to get a smaller amount of pips and just get out of harm's way.
Now, on
so that's just one strategy.
Now the red line running through from top to bottom, that shows the place where a candle closed. So you only enter on the close of the candle, Jennifer, is that true?
Okay, yeah, I can see how that's not clear. So where the red vertical line is going through. That's the candle where we enter the trade. And in this instance, you know, it does look like that's exactly the candle that where the MACD is crossing. This is an area that is discretionary. I actually don't wait for candles to close. I know that Rob does wait for the candle to close, but I don't wait for the candle to close. If you're doing a 5-minute chart or something smaller, it's easy enough to go ahead and wait for the candle to close. If you're trading from a 1-hour or a 4-hour chart, if you wait for the candle to close, you're going to miss an awful lot of the momentum that's behind the move. So if you agree to enter the trade before the candle closes, you just have to agree to exit the trade if by the time that candle closes, it's no longer a signal to be in the trade. And you know, that doesn't happen very often. Normally, when that MACD line is aiming for the 0 line, such as it is here, it's not going to miss. It's just not going to miss. So, so you could enter the trade as I do before the candle closes, and like I said, just be prepared to simply close the trade if it within 5 minutes, if that candle closed with a candle going up and the MACD line was no longer going below 0, I would say, okay, I was wrong on the entry and just close the trade. This is an Aussie yen 5-minute chart, also from the U.S. session, showing that once we got into the trade, excuse me, we did have some drawdown on this trade, and that does happen sometimes, and that's why I have to have a stop loss point. You know, I have to pick a number which is the maximum amount that I'm willing to lose. Interestingly, in my experience with with hopper trading on the 5-minute charts, -8 is a really customary drawdown number. I mean, it just goes 8 pips really frequently, and you know, most of the time doesn't go more than 8 pips against me once I get into the trade, once the MACD line has crossed over 0. And this is an example to show you that that certainly can happen, and in the end of this trade, we did get our 5-pip profit target. This was not a fabulous trade. This is a trade that barely got to its target. I don't like to barely get to my target. I like to take a piece of the trade that's right in the middle of the move and has, you know, safe margins around it. You know, but sometimes it just doesn't play out that way, and the MACD as a signal, as an indicator, you know, it looked perfectly awesome. So there was no indication that momentum was going to turn so abruptly on us. But when it does turn around and go the other way, you can see that the very next thing that happened was the MACD went up from below the 0 up above 0, producing a trade that I did not enclose with a circle exactly right there, which had you gotten out of that first trade with a loss, you would have had an opportunity to put it right back with a buy trade on the very next hopper. This is a pound-dollar 5-minute chart from the European session, and the red vertical line marks the candle where the MACD line crossed over the 0 line, where you would enter the trade. This is a perfect trade because there's no drawdown whatsoever. You get into the trading within 5 to 10 minutes. You have your first profit target if you're only trading for 5 pips. Now, if you happen to want to trade for more than 5 pips, the hopper does typically give us room to do that, and especially if you happen to get into the market during the first 3 hours of the trading session when there's a good amount of volatility, there could be some ranging at type activity from, you know, as seen from a 5-minute chart. And I'm going to show you some strategies for collecting a few more than 5 pips on these trades. So the next exit strategy would be to exit on a trigger, and I'm going to show you what that looks like. This is where we employ the signal line or the trigger line with the MACD. It's the red dashed line, and when the MACD crosses over the red dashed line, that's going to signal the exit for the trade. So starting from the beginning of this trade, on the 5-minute US dollar Canadian dollar chart, the red vertical line going through the candle right there, that's where you would enter the trade because that's where the MACD line was crossing from below 0 to above 0. And this is a great trade because there was relatively no drawdown whatsoever from the entry point to get into this trade, and you could either take your profit with 5 pips or we could exit on a trigger. On a trigger, the exit comes when the MACD line crosses over the trigger line. I call that a trigger exit. And in this instance, exiting on a trigger would have given us approximately 20 pips of profit.
I love 20 pips.
Yeah, that's Rob's favorite number. So I have a couple of things to talk to you about on this chart. This is another dollar CAD chart. The red vertical line marks the entry where the MACD line crosses below the zero line. And in this instance, the MACD line crossed below the zero line, so the hopper happened before the beginning of my trading session. So let's just say I want to trade the first 3 hours of this active trading session, and the MACD line made its move just before the action started. So you can see how it's going sideways, price is going sideways, MACD is going sideways. But it is indeed below the line, so that would have been the entry. What do we do? Do we have to miss it? And my answer is, heck no, we don't have to miss it. So if we draw a line under the low that it made when the MACD the MACD was indeed below the zero line, I'm going to wait for price then to come back below that level, and then I'm going to continue on with the trade as if it were the hopper happening for the first time. And in fact, at that moment, the MACD line is at that moment making its move away from the trigger line, and the histogram bars are starting to build some momentum. So that is all consistent, all indicative. So you don't have to be absolutely legalistic about that zero line, because essentially it's doing the same thing here. What's important is to notice momentum, and that's why I put the surfer on there to remind me that when you're out in the water, you're waiting for the swell. You're waiting for the indication. I mean, if you get out there on the flat water and you stand up on your board, you're probably going to fall off. There's going to be no momentum to carry you. And similarly, when there was no momentum in the MACD, even though it was just below the zero line, we needed to wait for that momentum to open up, for the indicator to show us that it was determining that there was a momentum signal. And just as an added benefit, we had an entry line on price below that recent low that it made the first time MACD thought it was making its move. Enters us into a trade. And then for the exit on this trade, you could easily have had your 5 pips. Looks like without any drawdown whatsoever. That would be in the circled area. Or you could have exited this trade on a trigger, which would have given you something closer to between 10 and 15 pips.
Now, when Jennifer mentions taking 5 pips or taking 20 pips or whatever, we always mean that the currency pair moved 7 pips in order to give a full 5 pips of profit, or moved 22 pips or 23 pips total to give a solid full 20 pips of profit. We're always saying that the price moved further than actually 5 pips because you got to pay a spread. In Boris's case, he's going to pay a commission. But either way, it's got to move the full distance. We're not talking about taking 5 pips minus the spread. We're talking about taking 5 or 10 or 15. And that's a question that always comes up, and it's a totally valid question. And we know that some of you were thinking that. So
right, absolutely, and that has to do with how I pick my favorite pairs for trading this trade on the 5-minute charts when I'm only looking for 5 pips of profit. I don't want to trade a pair that costs me 5 pips of spread in order to earn 5 pips of profit. I'm looking for the pairs that I can trade with a little bit cheaper spread. Right. And the other thing to say about that is
the Mexican peso.
When you enter your trade, your spread will be taken out and your trade will be dropped in 1.5 or 2 pips above or below, you know, if you're selling above your entry line there. So I'm talking about 5 pips from your actual entry line. So as Rob said, essentially the market will have to move 7 pips forward. Okay, so this next section, when the hopper happens, we get into the trade, and then we're going to exit when the MACD line crosses back over the zero line. If we're lucky enough to get into a hopper trade when the market is trending, it can really carry us much higher before it gives us a signal to get out of the trade. This is a 15-minute chart for the euro dollar. The entry, and I had to make it small because you see it covered some time here. Even just on the 15-minute chart, this one lasted for 2 days. Entering the trade when the MACD crossed over the zero line. And there was a little bobble there, and there was a little bit of drawdown, but it was less than 20 pips on that particular entry, which is hard to see because I had to shrink the chart down to fit on one page. So entering this trade here, and then the exit, Rob, if you'll point to where the exit would be when the MACD line crosses back below the zero line. As a matter of fact, when the MACD line crosses back below the 0 line, that creates a sell trade. But that, in this instance, is the exit for a trade. Now, this is not necessarily going to give you a higher profit every time, but if the market is trending, it will. If the market is ranging, it won't.
Yeah, and you can use your own definition of what a trend is. Lots of people last night and 2 weeks ago and a week ago asked what's the best way to determine a trend. The hopper is going to give you 5 to 20 pips very consistently. We'll talk more about backtesting and statistics when it comes to my turn. But it will give that profit very consistently. So that's the number one consideration that you want to really think about. You want to think about how consistent it can be. If you want to turn it into a trend trading strategy, then just pick your favorite way to determine a trend. And we're not going to deviate or go off on a tangent right now about that. You can pick your favorite method of determining a trend. Any number of methods can work just fine.
Right, and I'm really glad you brought that up because it's a bit of an advanced idea, taking the hopper into more advanced trading. If you don't know the difference between range trading and trend trading, use the hopper on a shorter time frame chart and just take your 5 or 6 pips every time. If you are already, an experienced trader, and like Rob said, if you have strategies for trend trading, or if you trade the news and you're expecting a large reaction to an economic report release, something like NFP or something like that, you would want to get into a trade and you would expect to get more than 5 pips in a moment like that if you're that kind of a trader. So I'm just applying the hopper to lots of different trading styles and trading environments. So when the hopper gets bigger, I'm going to go to the 1 hour and the 4 hour charts. So the rules change a little bit. First of all, we don't need to pick a trading session. Time has no factor here. We enter the trade on a hopper just like from the 5-minute charts, and we need a little bit more wiggle room, so stop loss can go up to minus 30 pips if you choose. Doesn't mean you have to wait for 30 pips. If you get into a trade and the MACD line goes back over your entry line, you can close the trade at minus 10 pips or what have you. You can pick a close similar to what we did before. Just pick a number, plus 10, plus 20, whatever your favorite profit target number is. You can exit on a trigger, or you can exit when the MACD line goes back over the 0 line, just like we did before. So you can go to the next slide. Here is a 1 hour dollar CAD chart, and these trades entered where I put the yellow line showing that the MACD line crossed from below 0 to above the 0 level. The hopper happened, and we entered a buy trade that was good for 40 pips before we exited on a trigger being when the MACD line crossed over its signal line. And then there was a sell trade, on that same chart that was good for 50 pips when the MACD line, when the hopper happened and the MACD went from above 0 to below 0, exiting that trade also on a trigger. This is an example of if you wait for the MACD line to go back over the 0 line, it may not necessarily give you more pips. In this instance, getting out on a trigger gave us 37 pips, where waiting for the MACD line to cross back over 0, price had begun to fall really rapidly, and so we didn't get as much of a profit. And sometimes we can go all the way back down to break even if the trend doesn't really take off in our favor. Aussie CAD produced a really nice one here. Entry came when the hopper happened. MACD went from above 0 to below 0. Exit on a trigger gave 127 pips. These are super recent trades, by the way, too. And this is a chart that a friend on Twitter sent to me. He took the hopper and applied it to his current trading strategy. I don't know his current trading strategy, but it looks like he has some support resistance lines on there, and he used the hopper to time his entry, and he used the trigger to time his exit, which is great on this chart because the entry happened right as price was rising up off of his support level, and the exit happened as price was running into his resistance level. So I love it when indicators and systems sort of mesh and give you the same information. That always makes me really happy.
And for those of you that are familiar with Twitter, and I know many of you are that are here tonight because you know Boris, you can kind of join the hopper movement. I don't want to call it a movement. It's not a religion, although we're thinking about making it a religion. Thinking
Oh,
about
you
having hopper,
should. You should. You'll get all the tax benefits.
hopper scriptures, and Jennifer can be the hopper prophet or priestess or something like that. If you want to be a part of the hopper community on Twitter, use the hashtag hopper trade. That's catching on, and then we can look at your charts during the day and comment on them and talk about them and become friends, and then whatever, doesn't matter. Let's go on.
So I just wanted to wish you all happy hopper trading, and it's great to see Rob and Boris out on their surfboards.
That's so good. Okay.
I have never been on a surfboard in my life.
Okay, for those of you that are still here, and all of you pretty much are, we have about 7 minutes left in tonight's presentation, and I want to take you through a number of things in rapid fashion. It's Rob Booker here. You've heard from Boris tonight. You've heard from Jennifer tonight. I'm not going to take too much of your time. I want to talk about statistics, backtesting, reliability, legitimacy, depending on a trading strategy that you've never seen before, and the like. I also want to preview the red hopper, which is an adjustment to the hopper trade that I invented. Preview it. We're not going to fully get into it in tonight's webinar, or else we'll be here all night. And then I want to invite you to be a part of a hopper trading class that Jennifer is going to lead in the month of November. I call this the red hopper. It's the angry rabbit, in other words. I spent the last few weeks and months actually working through Forex Tester and other backtesting software, both automated with an expert advisor on MetaTrader and manually testing it by hand on Forex Tester and looking at the red hopper. I tested the hopper as well, and much of what I'm going to say is going to be applicable to both. But it's a common question. I mean, what can you expect to make from a trading strategy that you learn in a webinar like this? And I'm sure you at least expect me to have an answer for it, although you are going to know that I'm going to also recommend that you do your own testing. Okay. In 2012, the red hopper, which I'm about to show you, made 1,412 pips. That's over the course of about 165 trades. It produced 165 trades then over the course of about 10 months. So on a 15-minute chart, it's going to produce 15 to 17 trades per month. I trade on the 15-minute chart using Jennifer's methods, and I found that the hopper trades and the red hopper trades produce essentially the same number of trades per month. So you're looking at about 15 trades per month. This is the equity curve over the course of the last year. This is a copy of my back testing trade by trade. It's so small that you can't read it. On the website 15minuteforex.net/invitation, which is also the page which invites you to be a part of the hopper trading class starting in November, I will post on October 19th this spreadsheet in Microsoft Excel so you can work through it yourself. You'll find that hopper trades on Fridays are not very good, and hopper trades on Thursdays were very powerful. And there's some reasons behind that. We don't have a lot of time to get into it. But the back testing is done. These are hundreds of trades, and there's many more joined to it. Here's what I did with the red hopper. I traded the euro dollar only on a 15-minute chart, and it produced exactly 1,412 pips so far in 2012. The biggest loss was 50 pips. The largest gain was 70 pips. That's a pretty good reward to risk ratio. On average, the winners were slightly bigger than the losers, and it had a better than 60% win rate. This was also true of the hopper testing that I did based on what Jennifer shared with you tonight. Remember, there are a variety of different profit targets that you may choose to use on Jennifer's hopper. On this version of the hopper that I'm showing you tonight, the red hopper, hopping mad, red hopping mad, the stop loss at a maximum was 50 pips. The profit target was 70, but I used a 20 pip trailing stop, so the profit targets varied from trade to trade. I'm going to show you some examples of what a red hopper looks like. A sell trade is the candle on the chart that you see right now, designated by the green arrow. This was a 30 pip winner in this instance, using the trailing stop methodology. The red hopper looks at Jennifer's standard hopper, which is the MACD signal line crossing the zero line, combined with a stochastic oscillator filter. I'll get into that in a moment. Here's an example of a sell trade. I don't like to say we call the tops or the bottoms of the market. I often will say that he who tries to pick bottom only gets stinky finger. So I'm not really into picking bottoms or tops. I'm just into taking trades. What's nice about the red hopper and the hopper are that you'll pretty much get yourself in at either an early entry or in the middle beginning of an entry. That's what we're trying to do, in the middle or the beginning of a move. In this example, it's right at the beginning. We get a red candle at the top there, the red hopper. It's a sell trade, and that's a full 70 pip winner. You can see that it moves in our favor. Jennifer used the term drawdown a few moments ago in the webinar. That refers to the amount of money lost in the midst of holding the trade without closing it. It's the pain you experience while holding on to a trade. Many of these red hopper trades, I like them because there is not much drawdown. It's got a filter on it, so it takes fewer trades, but the ones that it takes either go against you immediately, but they don't drag on forever and hurt you. Here's an example of a buy trade. You can see the green arrow pointing to a candle with a red mark through it. That's a buy trade. And that was a 30 pip winner on this methodology. These are just the most recent red hoppers, actually, from my own charts. Here's a buy trade from the 21st of September 2012. You can see the red line running through a white candle at the bottom of my chart, right near where my mouse is right now. That's a buy trade that was good for 60 pips. You can see that right before the market exploded with a very momentous move, the red hopper called the market. Jennifer loves to use that word, momentous. Here's a 40 pip winner. You can see that from left to right. Once again, the red hopper is a standard hopper trade with a stochastic oscillator filter. The biggest loss was 50 pips. The biggest gain was ever 70 pips. It maxed out at 70 pips, and it had a better than 60% win rate. Lots of you ask what currency pairs Jennifer likes to trade, or I like to trade with these strategies. The euro dollar is the grand poobah, queen, big cheese, the one that calls the shots, the one that's in charge. We like the euro dollar with this strategy, but we've looked at and done some initial testing with the Aussie dollar, dollar CAD, euro pound, Aussie Canadian dollar, and just about any other currency pair you can watch. We do not favor the exotic crosses, such as the Mexican peso, the Polish zloty, the South African rand. These are not currencies that we're going to trade with these methodologies. The Turkish lira, we don't want to do that.
Hey, Rob, say zloty again.
The Polish zloty.
Very nice.
Okay, the red hopper. Has it been automated? Yes. It's already been built for MetaTrader 4 as an indicator and as an expert advisor or robot. We're building it for Thinkorswim, eSignal, TradeStation, the FXCM charts, and for NinjaTrader as well. You might be wondering how to get a copy of the red hopper, or a copy of the trigger finger, or a copy of the golden hopper, or a copy of Jennifer's RSI trade, and a number of other strategies. Well, tonight Jennifer taught you the hopper for free, and in November of 2012 she starts a 20-hour-long trading class all about the hopper and its derivative trading systems, meaning other systems based on the hopper that include a variety of entries and exits, long-term, short-term trades that literally produce hundreds of trades per month, with hundreds of back-tested examples to back them up, screenshots of hundreds of historical trades so you can measure what you're doing against what you're looking at on the charts that we traded, and you can find more information about that. You can also watch a replay of this webinar on the link that you see on your screen right now, 15minuteforex.net/invitation. We'll send you an email tomorrow that includes a recording of tonight's webinar, but if you want to get right to it, last night's hopper webinar that we did for about 500 traders is available right now at that link, 15minuteforex.net/invitation. There are 12 spots left available for the November class. Jennifer doesn't do these very often. They're not expensive. Jennifer is not in the business of making her living from educating you. She's in the business of trading. That's why she shows everything that she does. But there is a fee for the course, but it's very small, and we'd love to have you join the course. I'll be there as a moderator and a host, and Jennifer will share a variety of trading strategies. Once again, you can sign up at 15minuteforex.net. There is a special discount available until Friday. That discount expires, and then the price goes up. We appreciate your attention tonight. We thank you for spending a few moments with us to talk about trading strategies. I know Boris cares about you as a trader. Boris has spent more time mentoring and talking to retail traders, spending time answering questions than just about anybody else I know besides myself. Jennifer loves traders. She's on Twitter just like Boris is. From the moment she gets up in the morning to the time she goes to bed at night, She shares charts, ideas, strategies. Some of what Boris does is free. In fact, 70 to 80% of what Boris teaches is always free. Some of what Boris teaches is not free. Some of what and most of what Jennifer teaches is free at no charge. Videos, blog posts, charts, and presentations like the one you saw tonight. There is some specialized content that takes a longer time to teach that has been beneficial to hundreds of traders from around the world. I've spent 13 years in this business, and I only do webinars with people that I know well, who I've seen trade live. I've sat next to Boris in the room as we traded back and forth. I've sat next to Jennifer as she traded tens of thousands of dollars in and out of the market, and these are people you can trust. And I'm honored to have spent some time with you together tonight. So thank you, Boris, for your time tonight. I know you stayed up late on the East Coast. We really appreciate the time you spent with us.
It's been awesome. Thank you very much. I just want to clarify something because I'm looking at the questions here. The system that I showed you wasn't just something that I just pulled a chart out and just did this randomly. This has been back tested with literally about 5,000 samples. Going all the way back to, I think, 2004 on TradeStation. What I just simply did with you with the chart was a blind trading session because I hadn't traded the euro-dollar over the last, since the beginning of October because I've been focusing on something else. And I think there was a misconception here in the room that I had no idea of statistics because I was only using 20 samples of trades. If that was the case, then I certainly don't have any idea of statistics. But the background of why I'm confident about what I do with the RSI system is because I literally have thousands of samples of trades across a myriad of trading environments. So just wanted to clarify that.
Yeah.
This was just for fun.
Yeah, Boris, and I want to back that up. I have sat next to Boris as we traded by pulling stuff out of our butt. I have sat next to Boris when we...
Which is how all trading starts.
Yeah, as we had a great time joking around with each other. This was not what we did tonight. I would never bring anyone here to a webinar and show you something that Boris just pulled out of thin air. So absolutely, Boris, that's absolutely true. Now, if you want to sit in a room with Boris and I sometime and look at the short-term charts, we will have, and Jennifer too, we would have a great time just going all over the place. But when it comes to our own money and making a living at this, everything that we do or that we share with you, we're going to be around a year from now. And if it doesn't work or if it's stupid, we're going to still be around. So
right.
we want to share things with you that truly work. So
exactly.
I appreciate you clarifying that.
And more importantly, just like they say in the software business, we eat our own dog food. These are all trading strategies that we actually trade with not with our own money, but on our own accounts, personal accounts. So everything that I do here is literally what I do myself right now. So I just wanted to make that clear to everybody. I traded blind because I just wanted to see if I could, if the thing worked well in October, and it did work well in October, but only because I just wanted to create the kind of mystery that I would put you basically myself into your shoes when you're looking at this strategy.
I loved every minute of it. I love it, and it's phenomenal. And every single time I talk to you, Boris, or you, Jennifer, you teach me something that I hadn't ever thought about from looking at things in the traditional way of looking at them. So without further descriptions, this recording will be available within 24 hours, and we will send it to your email address. You will receive at least 2 additional emails from Boris and Kathy and from Jennifer and I with a copy of this recording. You'll receive multiple emails to make sure that you get it. We invite you to take some time tonight, look at those websites, familiarize yourself with the materials on there. There's a lot of free information in these locations in addition to being invited to be a part of the BK Forex Club. I'm a member. I love it. I love the analysis that they do, and I also subscribe to everything that Jennifer does as well. Thanks, everyone, for spending your time with us. You were the stars of the show tonight. Your participation here made all the difference, and a special hello to Ron Cooperman and Harriet in Kansas, and Roger and Grant and Ray and Elliot and Mike and all of you who spent time with us tonight. It's nice to see Adrian here and Frank, and lots of our friends from all over the world were here tonight. Have a wonderful evening, morning, or afternoon, wherever you are. Jennifer, thank you for your time.
Thank you for inviting me to spend time with you again. This has been a lot of fun.
And Boris, thanks again. We'll see you later.
Oh, thank you, guys. And don't forget, coming in November, we're going to do another webinar on risk, which is going to, I think, it'll be very interesting. And for those of you who come to the FXCM Expo in Vegas, we'll both be there. Love to see you guys.
Yeah, we'd love to see you there. See you later, everyone. Happy trading.
The organizer has ended the session, and this call will be disconnected.